Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Tuesday, 10th of February. We have jobs number tomorrow. We had a weak retail number, and let's get right into the charts. I do have a class coming up, which is going to be really apropos to what's going on. Yep, the biggest mover today has been interest rates. I don't know if anybody's been noticing here, but we do have rates plummeting. In fact, they're sitting, let's take a look here. Um, yeah, 415 on the 10-year yields. Uh, that is taking us down to perhaps 412, which is a major support. Then if we break that, looks like we're headed back down to four. Now, the impact here, it's two things. People will say, well, this is good for mortgage rates, but the fact that they're falling is basically a indication of a weaker economy. If we have some really weak numbers tomorrow, I think rates will fall. Now, beneficiaries of these will be like housing stocks and the obvious interest rate sensitive plays, which in fact, you're seeing a lot of the housing stocks moving higher today. Haven't broken out yet. If you look at DHI or Lennar or some of these stocks, they've been basically range trading, kind of tracking rates. But if we do have a big break in interest rates, we probably will have those stocks moving higher. So that's kind of an ancillary way to look at them. Averages just meandering here, cannot get any kind of traction. In fact, they're starting to move lower. We have the NASDAQ right at that supply, can't really get above it. Underneath the surface, all kinds of stuff going on still. Software's getting a little bit of a boost. Bitcoin also cannot, seems to not be getting any kind of traction here. Also. So, uh, consolidating similar to the stock market. I think if we can't hold on to the 68K level, I think we're going to retest and maybe even go lower on Bitcoin. That's something I'm watching very carefully with sentiment being really uh, negative on Bitcoin. The dollar is also falling as a result of these lower rates. We'll see if it can hold 96. For the most part, uh, the metals are just holding steady here. So it's been really just a consolidation day across a lot of these markets with like gold on the cusp of breaking above 5,100, silver sitting also right at 80K. Looks like it needs to break above 82, and so on and so forth. So pretty much, um, it's been a very, very quiet day. I think tomorrow's non-farm payrolls data could change things. Even nat gas looks like it's consolidating here with these massive moves as well. One again, I talked about this the other day. Soybeans is the bit, the grain markets, they broke out at 1077. Looks like they're headed to 1160. So we'll see if that continues. So overall, I think leading into tomorrow's non-farm payrolls could be interesting. Um, and if we, again, if looks like the market, especially the bond market, is signaling we may have a weak number there, and how far rates fall on that is going to be interesting to see. So overall, I'd say, a lot of rotation going on below the surface. That's still the play. Speaking of which, I have a class coming up a week from today, which is going to be talking all the various correlations. Um, People don't realize there's a correlation between the software index and Bitcoin. Um, so I'll be talking about that. And basically, what that means is if you bought Bitcoin at the highs and software stocks at the highs, you're really getting hurt. And there's some other correlations, not just necessarily the traditional, dollar against the currencies and all that kind of stuff. But there are a lot of correlations going on right now between different sectors of the market and so on and so forth. So catch that class, sign up for it. Also sign up for the newsletter. And we'll see what happens tomorrow and see where we end up the week. But it's going to be an interesting end of the week, starting with the non-farm payrolls tomorrow. Okay, have a great rest of your week, and we'll see you Friday. Take care.